you used a VA for a loan and you paid it off, sold the home, or refinanced it, then you can reinstate your VA benefit. So then you have a full benefit again. The problem with a lot of vets is they don't realize the benefit that they really have. They don't really know, the details about it. So there's a lot of myths and different things about VA loans.
Hi there, Erin Halstead with the Inglewood Area Board of Realtors. Today I am with Don Wilson, who is one of our affiliate members and currently the chair of our affiliate committee. Today we're going to talk about the things that Xavier Financial does and mortgages, specifically VA mortgages.
Absolutely.
So here's Don.
Yeah, welcome. Thank you. And I appreciate the opportunity to talk to you, Erin.
Thanks for letting me talk to you.
Absolutely. So I know that you have a lot of questions.
I do have a lot of questions.
So, I'm prepared to listen to your questions and pick which ones you want to discuss. Go ahead.
Okay, so on VA mortgages, a lot of people have some misconceptions about how they work. A lot of people are concerned about down payments and the kind of paperwork that's involved in a VA mortgage. They think it's more paperwork than a regular mortgage, and some people are just afraid of that. So can you kind of talk about the paperwork and what's required to qualify for a VA mortgage?
Sure. Well, the qualification is for vets, also for active duty and some, surviving spouses, right? That's what the program is for. It's started in, I think, 1944, 45. It's considered the GI Bill. Qualifications for a VA, is, that you honorably served. You have a certificate of eligibility, which is provided by the VA.
And that's more than just your DD-214? You need something else?
Yeah, your DD-214 is it, but the certificate of eligibility gives you what you can buy, what you've used of that benefit, and what you have remaining that you could use again.
We're going to have to talk more about that because I didn't understand that portion of it. So if you've had a VA mortgage before and you've paid it off,
yes.
You may still have the full eligibility, or does that change?
No, if you paid it off, if you used a VA for a loan and you paid it off, sold the home, or refinanced it, then you can reinstate your VA benefit.
Okay.
So then you have a full benefit again. If you only use part of it for the purchase of a home, then you would have some remaining eligibility that would allow you to maybe buy a second home, and still have two VA loans.
Oh, okay. So I had no idea that was an option, that you could have two concurrent VA mortgages.
Absolutely.
Okay. So second home buyers, VA may still be an option for them depending on their eligibility requirements.
Correct. Okay. But let's start with the first VA loan. First VA loan, or, VA loans are designed for primary residence, right?
Right.
So if the vet lived in the home for, a period of time, which is typically 1 year as his primary, and they still had some eligibility, they could purchase another primary, turn their existing one, into whether it's an investment or a second home, right?
Right.
But using a VA on a purchase for an investment property is not allowed.
Okay. But they do have to sign a form saying it is going to be their primary residence.
Oh, absolutely.
So, and that can be their intent, that this could be their primary residence, and they're going to then sell the other property at a later date. If this was their second one.
Yes.
Okay.
Yes. And it's designed for, again, for primary property. So, but when we look at primary property, we need to expand it a little bit. And in the expansion of that is it could be a duplex, it could be a quadplex, right? It could be income generating, just that the vet in that year, it has to be their primary.
Okay.
Right?
But they could purchase a duplex and still have rental income off of half of it.
Absolutely. Okay. Absolutely. It's a good wealth building program. Talking about back to eligibility, a lot of times it's kind of not thought about by vets. Being a vet myself, they don't really know, the details about it. So there's a lot of myths and different things about VA loans. But I got to say, they're really, truly untrue. in the market, vets serve our country. They deserve it. If a seller discarded a qualified vet, just based on it was a VA, I mean, that would be disgusting to me, right? The opportunities for a VA loan is not only a lower rate, and it's typically, could be up to, 1%. And, the savings on a monthly basis, averaging between $100, $200 difference in a mortgage payment. The nice thing about VA loans is there's no PMI. The question has always been, zero down. So we talk about zero down all the time, but it's not really fully zero down. But it could be, right, Erin? If they still have closing costs, right? Got that involved.
Yeah.
But there's only certain things that a vet could pay up front,
right?
Versus a normal conforming or other government loans. There's things that people are afraid of when they think of a VA loan. They think, well, the appraisal's hard, or there's too much paperwork, is what you suggested. There isn't really too much paperwork, right? I mean, there's a lot of paperwork in our business, in mortgages, right. But there's a few forms that are necessary. Some additional things. It could be a well inspection, termite inspections, because VA appraisals, they look at health, safety, those factors. Those are added in compared to a normal conforming conventional appraisal, right? So sometimes they look at it and they say, well, geez, that appraisal is going to just rip it apart, but it's not. They're looking at the safety of the vet, the livability of the vet, that there's no trip hazards, there's no railing missing, there's no open wiring. Those are the additional kind of things that a little more scrutiny in the appraisal, but both look at value, right? And on a VA, value matters, right? Because the Veterans Administration doesn't want the vet to overpay for a home. Not saying that they can't, but they look at that value, and the value is the same as a conforming value, right? I mean, it's exactly the same. But, we want our vets to be taken care of because they took care of us.
Right.
So if you're selling a house and it has, some real safety issues, it's best to get those squared away before, the appraisal ever comes in.
It's best for the seller to get those issues taken care of before they ever even show the house. You certainly don't want to be showing the house and have somebody trip.
Right.
Yeah.
But there's VA programs, that are also available for, for restoration and, different things like that too, also available.
So can somebody that has a conventional mortgage now but qualifies as a veteran, could they refinance? Is there an opportunity to do that with you?
It's always available,
okay.
And vice versa. It all depends on the market.
Okay. So who do you typically see applying for VA loans? Do you see more first-time buyers? Do you see people that are a little bit more experienced in the market?
Are you talking about just on a VA side? On a VA side? Okay. The problem with a lot of vets is they don't realize the benefit that they really have, right? So when they make a mortgage application with us, one of the questions is, are you a veteran? Are you a surviving spouse? And, so when we see that, then the discussion changes, right? Always changes on my side because, it comes down to education. You wouldn't want to put somebody that served our country in a conforming conventional loan, a higher rate, when we could look at a VA side of it, it's not only the rate, but the benefit for the vet. So we do a comparison. Where mistakes happen is that, if you're not a professional and, understand VA loans or, do them a lot, loan professionals will just kind of overlook it, and back to what you say in paperwork or, the processes and alike, so it's best to talk to somebody that does a lot of VA loans.
So there really isn't a lot of extra paperwork. They do have to provide documentation up front so you can prove that they do have the eligibility.
Right. We
But other
pull.
than that, the paperwork's pretty much the same.
Right. Right. Yeah. We have direct access with the Veterans Administration. We pull their certificate of eligibility out.
So it's something you do. That's not even
Absolutely, we
something
do
that the
yes.
buyer would have to do. Okay.
Correct. If it doesn't come up, then there's a process, for that, for it to get put in.
So a first-time buyer that had maybe never applied before, is there any more of a challenge for them? Or you
No,
just have
not
access
really.
to the website, you pull it up?
Not really. They're not paying for an appraisal up front. There's, there's quite a few benefits. I mean, for first-time home buyers, typically, not a lot of savings, or maybe they do have some savings, but when you look at affordability and low cost to get in, it's a perfect program.
Okay, so on a conventional mortgage, sometimes we run into issues with debt to income. Once they get the quote for insurance or something like that, that kind of keeps things, no longer in the proper order that you need it. But with a veteran and a VA loan, that doesn't matter.
Correct.
Okay.
Correct. So, we don't use DTI, in that process. We use, we use that residual income, and there's a formulation for residual income. And, again, it's debt, to income. I mean, that exists in that calculation. We also add in, like square footage of a house, so that we know what the utilities, what the cost, for a vet is. And when it comes down, we have a score that has to stay within, right? If it stays within that score, if the DTI is 60 or DTI is, 68, whatever, it's still an approved loan. It's not like a conforming conventional where you hit that plateau at 50 or 43 in some cases.
So on a conventional mortgage, underwriters don't typically look at a wind mitigation or a 4-point or anything like that. Does a VA underwriter look at any of that kind of documents?
No, it's on appraisal.
Okay.
It's on the appraisal. Again,
Because their appraisal is a little bit more detailed than a standard appraisal. They actually talk about health and safety issues of the house.
Correct.
Okay.
Correct. And the other thing that we didn't talk about is loan, loan value. In other words, where the, with a vet, is there a maximum loan amount? I mean, that's another thing. And I could tell you, no, there is no.
So there's
loan
no
limit.
jumbo or non-conforming, so to speak, with a VA.
Well, there's well, pricing does,
Okay.
so we have we do have a VA high balance and, a VA jumbo, but that only happens in pricing, but does not disqualify the vet from buying, a $5 million home.
Okay. So some veterans may qualify for the zero down. Does that factor in based on the dollar amount? Would that change? Is that a scale based on the sale price?
It does, and when you look at conforming loan limits, right? So going above that, they would have to pay a little more down than they would at that zero.
Okay.
Okay, but zero is not exactly zero. Zero is still in closing cost. So that has to be looked at.
And sometimes, as a listing agent, we can help buyers agents negotiate getting the seller to help pay for those closing costs.
Absolutely.
So some veterans do really come to the table with zero down.
Absolutely, we've done them.
Yeah.
Yeah, we've done them with zero down. Yeah, or very little down.
Yeah. Sometimes a challenge, but it can be done.
Yeah, I think it's one of the best benefits, for veterans, and it's also, one of the simplest loans once you know how to do it, to put through. All the confidence in the world, because with the Veterans Affairs, guaranteeing the loan, lenders love it, so that's why we have lower rates.
So on a conventional mortgage, it's sold on the secondary market. It's Fannie, Freddie backed, whatever. How is a VA backed?
Pretty much the same.
Okay.
All mortgages are on that mortgage-backed securities.
Okay. So there's
It's
no
just
one person or no one lender that specifically deals with VA loans.
well, the VA guarantees the loan, right? So in default, that's what it's about.
Okay.
And then funding fee. I didn't think, I don't believe we talked about funding fee. there is a funding fee. There's no PMI, but there's a funding fee, for veterans that deals with keeping the program going, right? But that funding fee could be exempt based on the service-related disability of the vet.
So the funding fee, is that something that would be considered closing costs, or would that be rolled into the mortgage?
Either way.
Okay.
But it's typically rolled into the mortgage.
Okay.
Yes.
So there's no PMI.
No
The
PMI.
interest rate is lower.
Correct.
It's not any more paperwork, no more of a hassle. It sounds like a win-win-win. So if you've done something with the government, specifically you have to have been in Army, Navy, Marines, Coast Guard, anybody else that qualifies?
Well, yeah. There are programs, for the National Guard too.
Okay.
I mean that, but it's a little bit different setup for it.
Okay.
But it's still, they still could qualify.
Well, if you've served our country and you may qualify for a VA mortgage, it sounds like it's a win-win-win for everybody. Come see Don Wilson and check out your opportunities for getting a VA mortgage. Thank you very much, Don.
Thank you, Erin. I appreciate the interview and the opportunity.
Very insightful. Thank you.
Thank you.